Hi everybody, this is Ospreyeye from MyChartCoach.com, and in this video we're going to take a look at some of the stocks that were in play today. Okay, so first up here is OPTT. This had a good move yesterday. The bullish there was a bullish bounce off of the 50-day simple moving average, and so congrats to everybody that caught that alert. And then today there was really nice follow through. It did close up 40%, but there were some red flags today that the chart was breaking down, and I'll show you that in a minute. There was after hours news that they are going to be diluting, and so the share price took a hit, and after hours trading, I believe it was down to around $1.49 or so. So what happened today on the chart is there was a gap fill. The top of the gap from back here in April, this level broke today, and the share price ended up running up to this closing price resistance from back here in April, and that's where it ended up finding resistance and pulling back. It got close to the 300-day simple moving average resistance zone up here at 289 and this high close level, and it pulled back, and this long upper wick formed, and the long upper wick was a signal that there was possible dilution already, possible shares being sold, and definitely profit taking. If you take a look down here at accumulation distribution, you can check out accumulation distribution. The share price was up 38% today, but accumulation distribution spiked down. So that's bearish divergence. Same thing with CMF, with shaken money flow. You would think with a nearly 40% gain on the day that there would have been a big green volume spike on the CMF histogram, but there was a spike down. So that's another red flag. Okay, so you've got the climax event when the top of the gap is filled. A gap filled many times is a climax. You know, if there's a close above, it does signal more upside potential if it can hold that level. But it failed to. But what happened is the after hours news it killed that. There was a long upper wick. The key support level to hold was the 200-day simple moving average at 179, this red line. But now the share price is below that level, and you notice that there was a gap here between a high of day yesterday and low of day today, and so not sure where the share price is going to open tomorrow. You know, it could rally pre-market. There's no, we're not sure what's going to happen, but it looks like it's going to open down. If it did open at the after hours closing price, that would put it down here at the bottom of this gap. And so what you'd be looking at for support levels is going to be down here with the middle Bollinger Band at 139, the 100-day simple moving average at 132, and the 50-day simple moving average at 130. That's the green, gold, and dotted purple lines. So if there's a break below 130, that's going to be major downside risk, and that's going to signal more downside potential. You're going to have this support here, low close support just below 120, around 115 or so. That's a major support level to hold. Notice it held after this pullback back here in August, and so if it does bounce off of 130, then in order to keep the uptrend going, it's got to stay above that middle Bollinger Band. It looks like it's going to work its way back into this previous channel. It was breaking out above the channel. There was the giant volume, and it looked optimistic. But if you look here at the 15-minute chart, you will see that we were charting this in the chat today, and it really pays to be in the chat. I highly recommend that for anybody that's learning to trade, because we were showing this bull flag. Notice there's a flag pull on the first candle of the day, and then there was sideways action. It was forming this flag pattern, and so we're looking for a break above the high close horizontal resistance and the top of this descending resistance line to signal the breakout higher, or the red flag is going to be the break below ascending support and horizontal support. So this candle right here at 11:30, that signaled downside risk, and this was the clue. The alerts were put out in our chat that the chart was breaking down, and that gave everybody a chance to lock in gains from because we were putting out alerts back here. And so so anyways, it pays. We try to explain the plays in the chat and teach during the trading day, and so showing the chart breaking down, that this break below the middle Bollinger Band here was another red flag. When the middle Bollinger Band turns into resistance on the 15-minute chart, it signals downside risk. Okay, so now where are we at right now? Now the share price is way down here. This is the bottom support level on the 15-minute chart. The 300 simple moving average and the 200 simple. The 300 is the bottom, but they're both lined up right now at 148. And so 148 is the key level. You know, there's no surprise that it's at that level right now. It needs to hold that level. If you see the 200 and 300 simple moving averages turn into resistance on the 15-minute chart, that's going to signal downside risk. Okay, so take a look at the OPTT weekly chart. We were posting this earlier in the day. It looked like it was breaking out, or it has been breaking out above this very long channel, this downtrending channel, and it hit the 50-week moving average at 201. Keep in mind, this candle does not set until the closing bell on Friday. So you notice how it closed right at that level. And so now at 149, it's way down here. It needs to hold the middle Bollinger Band at 133. That's the big level. If it drops below the middle Bollinger Band, then that could signal continuation of this previous downtrend. It needs to stay above the middle Bollinger Band to keep this uptrend going. You know, now it looks like it's working its way back into the previous downtrending channel, and with dilution, you know, that could be continuation of, you know, we'll just have to see how it plays out, but the charts are signaling downside risk. Okay, so take a look at PLX. The PLX chart here, it had a really nice move, you know, with the big gap up open, you know, and everybody was excited thinking that this was going to, you know, head higher, but it formed the dreaded black candle. Notice that there's no upper wick on the candle. The first trade of the day was high of day, and then the bears were in control the entire day until low of day was hit, and then the bulls were able to rally back, and the share price did close above the 200-day simple moving average at 81. That's this red line. That's the key level to hold. If you see it holding 81 tomorrow in the 200-day simple moving average, that's going to signal more upside potential, and then we're looking for a break above this 95 and dollar resistance zone. A dollar is always a big level in Pennyland, in Pennyland, because stocks need to be above $1 to stay on the big boards. So you know, it's going to be huge if it can get back above $1, and if it can break that level, then you've got this prior trading zone here that we will be talking about. If it can get up above this dollar resistance zone, if it breaks below the 200-day simple moving average, then you have a gap between high of day yesterday and low of day today. And so this is the gap zone here. I know that it's hard to read, but there's the 300-day simple moving average at 71 and the 100-day simple moving average at 69. Those are both support levels, and then the bottom of the gap is just below that. Looks like it's around 67 cents. So a drop to 67 would fill the gap. Okay, so take a look at the PLX 15-minute chart, and so this is another one that we were charting in the chat today, and so as you can see here, it formed a symmetrical triangle pattern, and then once again it broke down, and we put out alerts right when this was happening, that support was breaking at 245 here on this candle, but the very next candle at 3 o'clock it found support and it worked its way back up. So it was an impressive recovery. The share price did not completely break down. It looked like when this happened, it was going to be like this move right here and continue with the nasty downtrend. But it ended up holding up, and it stayed above back above the middle Bollinger Band into the close. And then notice it closed above this descending resistance line. So that it needs to stay above that level tomorrow, which is at 81. The key level we were just talking about. So above 81 is going to signal more upside potential. If you see 81 turn into resistance early tomorrow, that's going to signal downside risk, and then your first support level, the major support level, is going to be down here at the 50 simple moving average at 73. Okay, take a look at AMDA. Okay, this chart is heating up. You got RSI at 66, so it still has a little room until the 70 overbought zone. You've got Fasto back above 80. There was a recent bull cross on ADX, and so the big move today was the close above the 50 and 100-day simple moving averages and the top of this channel. There was this downtrending megaphone type channel, and today there was a close above major resistance levels. And so the key now is to turn the top of this channel and the 100 and 50-day simple moving averages into support. So it needs to stay above 33, you know, above 33. If it stays at 34 and above, above, that's going to signal more upside potential. The key level to break is this 200-day simple moving average at 37.7, so basically 38. If it can close above that level, then the high close resistance up here at about 42 will be the key level from back here in July. Will be the key level to break. So this is a really nice move. It's heating up. It's got a nice volume spike. There was a recent PSAR bull flip, recent MACD bull crosses. The chart is heating up. The close today was well above the upper Bollinger Band. So if the candles do work back in the bands, the chart can still be bullish and the uptrend can still continue. Sometimes the stocks take a pause before the next push. On the pullback, that gives you an opportunity to load if you miss the big spike. So instead of a lot of times you buy the fear and then you sell the greed. And so you buy the dip and sell the rip. And so on right here on AMDA, you can see, I wanted to show you this chart. I showed you the other chart so you had a closer look at the action. But if you look here, there's this big gap back here from back in January and of 2017, the beginning of this year. And so what we're looking at is a potential break above this 200-day simple moving average, and that would put the bottom of the gap, which is this red line right here, and the 300-day simple moving average on deck. So it would put this 48 to 51 zone on deck if it can get above the 200-day simple moving average. So keep an eye on AMDA. It is heating up. We'll see if it can follow through. And then a stock that did follow through today was RXII. Congrats to everybody that caught the video yesterday. It still has RSI below 70, Fastos above 80. It had the bullish crossover on ADX. And so what we were looking for on this chart was a close above the 100-day simple moving average, which is the gold line currently at 57. And today that actually happened. And so that was the bullish development we were looking for. Notice how it also closed above this descending resistance line. So that was a big break above this channel, very similar to the last chart that we were looking at. And so we want to see that turn into support. Also, just look at and notice how it's just like the last chart. It's right here at the 200-day simple moving average at 63.4, and so it needs to close above that level. If that happens, then the high close here from 75 at 75 will be our next level to break. And then you've got 85, a high close here, and the 300-day simple moving average up here at 96. So if it can turn this 200-day simple moving average into support and get past 75, you could see this run back up to dollar land. Now if it fails to break the 200-day simple moving average, that would signal consolidation, and then you'd want to see that 100-day simple moving average hold. Now that it finally broke, you don't want to see the candles pulling back below that level. If they do, then it would signal that it's going to get back into this previous channel and continue the downtrend. So it has to stay above that level to be a good play. So far it's working out well. We'll see if it can break resistance. Okay, so take a look at HMNY. This was the big winner. We charted this thing basically to perfection because the signal was just to keep riding. It was super freaking easy. It's so hard to get you can lead a horse to water, but you can't make them drink. And people want to do all these different crazy plays and all this stuff. And all they had to do was just buy right here. And since EMA4 was holding the entire time, they never had to sell until either you wanted to sell on this doji up here because it looked like it was crazy overextended and it hit that super high and it was hitting a resistance level that we found on the monthly chart from previous levels. But if you didn't, then you could have gotten out on this candle here, which was the breakdown. But anyways, it was a huge gain no matter what. And the break below EMA4, that was signaling the chart was cooling down. So notice that it's been below that level since the pullback. Now we have a bearish crossover with EMA4 crossing EMA8 to the downside. That is not what the bulls want to see. But what's happening now is it's hitting our target. And so our target for a bounce is the middle Bollinger Band here at 1546. And so keep an eye out for a technical bounce off of that level. It should bounce off of that level. Notice that we've got declining volume here, and there's a declining volume pattern. The sellers are tiring. If it fails to bounce off the middle Bollinger Band, that signals the chart's just totally broken, and then you're going to be seeing a drop possibly all the way down here to the 50-day simple moving average at $8. So it's imperative that this level holds, and so it should get a technical bounce. It might only go back up to the EMAs 4 and 8 because it needs to get back above now EMA 8, which is the top EMA at what is that, 19 34. So yeah, so there could be a trade between 1546 and 1934 if that 1546 support level holds. If that breaks and turns into resistance, that's going to signal more downside risk. The charts are signaling it's setting up for a bounce, so we'll see if that can happen. Okay, take a look here at GLNNF. This was a stock that we alerted a couple days ago. It took a pause yesterday. This is a Canadian company that trades on the OTC, and it's holding the middle Bollinger Band right now. This could be a bear flag. Notice that you've got this downtrending channel, right? And then you've got this flag pattern coming off of it. So we have to be on the lookout for a bear flag here. But what needs to happen is it has to break above this closing price here on the 16th. And then if it can close above that level, that should signal that it wants to head higher. That's also lined up with EMA 8. And so a close above both of those levels, that's going to signal it's back in play. And then we'll be looking for that run back up to the upper Bollinger Band at 82 and that high close on the 9th. So 82 is the target. If it can close above, we'll say 58. If it drops below this ascending support line and closes below the middle Bollinger Band, that's going to signal downside risk. 45 will be the key support level to hold. A break below 45 and you could see a big drop down here to the 50-day simple moving average at 32. So keep an eye on GLNNF. Okay, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, please check us out at mychartcoach.com and our YouTube channel at mychartcoach.com. Thank you.